Good morning, student. Welcome you all once again in today's class and the last class on Ind AS 115. Right? Not the last class on FR, last class on Ind AS 115. Revenue from contract with the customers. Good morning, Udandam. Good morning, Chitra, Sankar, Sanjay, Ankit, Mamta. Good morning, everyone. Friends, up to this class, in the last 5 classes, we covered all the 5 steps of revenue recognition. Okay? We cover all the 5 steps, starting from identification of contract with the customer, right? Then what is my performance obligations, how I determine my transaction price, and how to allocate the transaction price into multiple performance obligation, and when to recognize a revenue. Is it a point in time or is it a period over time? Okay. So over the period of time or at a point in time, how to recognize a revenue, when to recognize a revenue. So we covered all the 5 steps with lot of examples and lot of illustrations. Today, I am going to cover 3 concepts. Concept number 1, I am going to cover the concept of repurchase agreements. When an entity is selling goods to the customer with a right to purchase in the future, right? So how to account for the repurchase agreement. Then I'm going to cover service concession arrangements, right? How to recognize a revenue if it is on the basis of service concession arrangement. And at the request of few students, I am also going to cover again the cost of contract, because when you recognize a revenue, going by the matching concept, you have to recognize some contract cost also. You remember in the last class, we did one of the illustration number 73 of ICAI study material on this contract cost, design service, hardware service. So I'm going to cover the concept of contract cost as well, right? So let's start the journey, and let me reach to my Excel file, and please confirm if my Excel file is visible to all of you. Please confirm if it is visible to all of you.
Yes, sir, it is visible.
Okay. Yes. So today, let me start with repurchase agreement. What is meant by repurchase agreement? As the word suggests, repurchase means again purchase. I have sold my mobile phone. I have the mobile phone. I have sold my mobile phone to Sankar, right? So I have sold my mobile phone to Sankar at 20,000 rupees. And I told Sankar that I will repurchase this mobile phone after 1 year for 25,000 rupees, right? So what does it mean? मैंने अपना मोबाइल फोन बेचा और मैंने एक कमिटमेंट ले ली कि 1 साल के बाद मैं शंकर से 25,000 रुपए में मोबाइल फोन दोबारा परचेज करूंगा. Then what does it mean? Is it a sale and purchase transaction, or is it something else?
It's like sale and lease back.
It's like sale and lease back. No, in sale and lease back, what happens? The seller becomes the lessee. It is the seller who is using the mobile phone, right? But here I have sold my mobile phone to Sankar. Sankar is using that mobile phone, and I will repurchase this mobile phone from Sankar. And I have sold it 20,000 rupees, and I will repurchase it 25,000 rupees. Means I will pay 5,000 rupees extra. Don't you think it is more like a financing agreement where I have received 20,000 rupees, I have hand over my mobile phone as a mortgage, and after 1 year, I will pay 20,000 rupees principal plus 5,000 rupees interest, and I will get back my mobile phone? Don't you think? This is the transaction?
Yes, sir.
क्या ये transaction नहीं है?
Yes.
So friends, that is why, this standard, as I told you, Ind AS 115, these Indian accounting standards are substance-based standard. Ind AS 115 is a customer-centric standard. That what is the nature of the relationship with the customer, right? Whether the customer is acting as a lender, whether the customer is acting as a lessee, whether the customer is acting as a customer, right? So friends, This is what we are going to cover in repurchase agreements. Friends, when I saying repurchase means I have sold and I will repurchase. Friends, there are three options in repurchase. There are three options, right? What are the three options? Forward. The option number one. Option one is known as a forward agreements or forward option. You can also say that forward option. Option number two, call option. Option number three. Option number three is put option. Put option. Now let me explain you one by one. Right? There are three options. There are three options in case of repurchase agreement. Forward agreement or forward option. You can say that forward option. But I'll not say forward option because forward is not an option. Let me tell you. Forward agreement, call option, and put option. What is meant by forward agreement? In a forward agreement, seller's obligation to repurchase. In call option, seller has a right to repurchase. Seller has a right to repurchase. Seller has an obligation to repurchase. Seller has a obligation to repurchase. Seller has an obligation to repurchase. Okay. Input option. What is input option? क्या होगा put option का मतलब? What is the meaning of put option? Tell me.
Right to sell.
Customer right to return the asset.
So customer
Right to
has,
sell.
so this seller has an obligation to repurchase at the wish of the customer. Means here the customer has a right. Here the customer has a right to sell. Means if customer wants to sell, it can sell. Means then the entity can purchase. If the customer does not want to sell, for example, I've sold my mobile phone to Shankar with a put option. So in that case, I don't have a right. Who has a right? Shankar has a right. And if Shankar wishes to sell this mobile phone, then only I have an obligation to purchase. Otherwise, if Shankar will say that your mobile phone is running fine, I don't want to sell your mobile phone to you. In that case, the seller will not be able to purchase that mobile phone, right? So in put option, like in forward agreement, the seller has an obligation to purchase. In call option, seller has a right to purchase. मतलब अगर seller का मन किया तो purchase करेगा, नहीं मन किया तो नहीं करेगा, right? So seller has a right. So what is meant by obligation? For example, if Anushi, I will say Anushi, you have an obligation to attend all the classes of FR. What does it mean? It is mandatory, right? But if I will say, Anushi, you don't have an obligation, but you have a right to attend the FR classes. In that case, you have an option. If you want to attend, you can attend. If you don't want to attend, you can't attend, right? Understood the meaning of obligation and right? Meaning of forward agreement and call option? So in forward agreement, there is a contractual obligation to purchase. In call option, there is a choice to purchase. Right? In put option, there is an obligation to purchase, but who is having the right? You can purchase only when the customer wants to sell, right? So put option is at the wish of the customer, right? So in here, seller has an obligation to purchase, but only at the wish of the customer. So here, customer has a right to sell. Customer has a right to sell, right? Seller has an obligation to repurchase means mandatory. Seller is mandatory obligated to purchase. Here, seller has an option. Either he can repurchase or he can't. Okay. Here, seller is mandatory obligated to purchase if customer wants to sell. Otherwise, no. Is that clear to everyone? Are you guys clear on the forward agreement, call option, put option? Are you clear?
Yes, sir. Clear.
Very much clear. Very much clear. समझ आ गया आपको?
Clear,
तो
sir.
फॉरवर्ड अग्रीमेंट और कॉल ऑप्शन में राइट किसके पास होता है? दोनों में सेलर के पास. पुट ऑप्शन में राइट किसके पास होता है?
Buyer के पास, customer.
Buyer के पास. Buyer has the right. Okay. So buyer has the right. Right. So this is the difference between forward agreement, call option and put option. Now let's understand the accounting part. Okay. Let's understand the accounting part. So what is the accounting in case of forward agreement and in case of call option, right? So I'll talk about these two accounting, option 1 and option 2, and then I'll come to the option number 3, right? So I'll talk about these three accountings. I hope up to this level, everything is clear. Any doubt on forward agreement, call option, put option? Any doubt? I believe there is no doubt. कोई doubt तो नहीं है ना?
No doubts.
Very good. Yes. So friends, now in case of forward agreement and in case of what? Call option. What does it mean? What is the accounting? If repurchase price is more than the sale price. If repurchase price is greater than the original sale price. If repurchase price is greater than the original sale price, okay, even greater than or equal to, even equal to will also be there. If repurchase price is greater than or equal to the original sale price, for example, an entity has sold a mobile phone to the customer for rupees 20,000 with a forward agreement to repurchase in future for rupees 25,000. Repurchase in future, that is after 2 years for rupees 25,000. Friends, in this case, your repurchase price is how much? Repurchase price is 25,000. And what is my original selling price?
20,000.
20,000 is my original selling price. Original selling price is 20,000. Friends, in this case, tell me, going by the substance, you guys understood the concept of substance over form? Have you heard about the concept of substance over form?
Yes, sir. Materiality over legality.
Yes, substance over form, right? Means you have to go by the legal, you have to go by the substance of the contract, not by the legal form, right? You have to go by the substance. So in this case, tell me, if I am the seller and I have a mandatory obligation to repurchase, or I have the call option, right? And I am paying more than whatever I have received. Do you think it is a sale and purchase transaction?
No, it's lease.
It's a
It's a
lease.
kind of lease. मतलब we are using it तो kind
No,
of a lease.
we are not using. So this entity has sold the mobile phone to the customer. Customer is using that mobile phone,
So
and
it's a
this
kind of
entity, yes,
finance.
yes,
Finance.
this is kind of a financing arrangement. मतलब उसने मोबाइल फोन बेचा, पैसे लिए और 2 साल के बाद 5,000 रुपए एक्स्ट्रा देंगे. इसका मतलब क्या था? उसने मोबाइल फोन बेचा नहीं, पैसे की जरूरत थी, उसने मोबाइल फोन को गिरवी रख दिया. सो बेसिकली दैट कस्टमर हैज द एंटिटी हैज मॉर्गेज द मोबाइल फोन, collected 20,000 rupees. After 2 years, the entity will pay 20,000 rupees principal, 5,000 rupees interest, and receive back his mobile phone. Correct? Yes or no?
Yes,
Yeah.
sir. Yes,
Yes,
sir.
sir.
So in this case, this will be considered as a financing transaction, right? So if repurchase price is greater than the original price, then this transaction, then it will be a financing transaction. It will be a financing transaction. It will not be a sale transaction under Ind AS 115. It will be a financing transaction. Sir, what is the accounting entry in this case? In this case, the accounting entry will be, what is the accounting entry on the day one? Day one. What is the accounting entry? क्या होगा बताओ फटाफट.
Bank account
It
debit.
bank account debit to or
Cost
data
debit.
account debit to sell.
Bank
Finance
account
liability.
debit to finance liability. Very good. To loan, to financial liability. Okay. Bank account debit to financial liability.
And difference will be financial cost. Finance cost.
So what is my credit? So it is 20,000 rupees. 20,000 rupees, right? And of course, so you have to pay 25,000 rupees at the end of the year. 5,000 rupees you have to pay interest over the 2-year period. 5,000 rupees you have to pay interest. So what is the during 2 years? During 2 years. What is the accounting entry during 2 years? Simple. Finance cost account debit. Finance cost or interest cost account debit. Debit to what? To financial liability. Finance cost account debit to financial liability. Credit.
Financial liability.
What is the amount? 5,000 rupees. 5,000 rupees. Right. And at the end of 2 years, what is the accounting entry? At the end of 2 years, what is the accounting entry?
Financial liability account to bank account, 25,000.
Financial liability account debit to bank account, right? To bank account. To bank. How much? How much amount? What
25,000.
25,000.
25,000, right? Have you understood the accounting in case of forward agreement and call option, right? Same accounting will happen in case of call option also, right? So this is the same accounting which is happening in the case of call option. So what I'm telling you guys, I'm telling you accounting in the books of the seller, right? Just a minute. Accounting in the books of the seller in case of what? In case of forward agreement and in case of call option. If repurchase price is greater than original selling price, then you have to account for this as a financing transaction. Okay, is that clear? Same accounting in case of with a forward agreement. Let me write here, with a forward agreement oblique call option. The only difference in the call option is, so if the seller is reasonably certain that the seller is going to avail the right of purchase, right? So अगर seller reasonably certain है कि seller right avail करेगा purchase का, in that case same accounting. But what happen if seller is not reasonably certain and seller is not going to exercise the right of purchase? Then it will be a sale transaction, correct? then it will be a sale transaction. Right?
Yes.
So now what happened? If repurchase price is lower than the original selling price. If repurchase price is lower than the original selling price, then what happened? क्या होगा?
Then it will be sale.
Then it will be, if
Sale.
repurchase price is lower than the original selling price. Just think about this transaction and why Ind AS 115 has covered these kind of transaction to eliminate the manipulation. Let me ask you a question. What's your name? Ankit. Okay, let's say Ankit. Ankit, I have sold you my mobile phone for 20,000 rupees. Okay. So in this case, what I have given you my
Mobile phone.
and what you have given me?
Consideration 20,000.
Consideration 20,000 rupees, right? With a right to purchase. And I told you, Ankit, listen, after 2 years, I am going to purchase this mobile phone. So we have entered into an agreement. Okay. So in that agreement, either it is a contractual obligation to purchase or I have a right to purchase. Means it is my discretion. And we have agreed a price of 15,000 rupees. So what price I have received from you? 20,000.
15,000.
What I am going to pay you after 2 years?
15,000.
15,000 rupees. So I am going to pay you 5,000 rupees less. Why?
Because the phone price has been decreased due to depreciation.
Because of the phone price is decreased? Or don't you think on the day one I have estimated a price which is lower than the original selling price. Don't you think that I have collected 20,000 rupees and I will also repurchase my mobile phone after 2 years. So in this case, Ankit has got this mobile phone for using. He wants to use that mobile phone, right? So in a way, I have given him the mobile phone on lease basis where he will pay me 20,000 rupees and I will refund 15,000 rupees. So 15,000 rupees is a deposit, 5,000 rupees is a lease rental. Don't you think that?
Yes, sir.
Yeah. So friends, if repurchase price is less than the original selling price, then it will be treated as a lease transaction. Okay. Now, what is the example? For example, an entity has sold a mobile phone to the customer for rupees 20,000 with a forward agreement or call option to repurchase in future for rupees 15,000. Now, what is the accounting entry on day one? क्या accounting entry होगी? Bank account debit to deposit liability 15,000 to advance lease rent. Anusi, is that entry right?
Yes, sir.
Are you agree with this entry or not?
Yes, sir.
During
Yes,
2
sir.
years, what is the accounting entry during 2 years?
Sir, we will lease rent account, advance lease rent debit to lease rent.
Advance lease rent debit, liability debit, advance lease rent. Let me write advance
Liability,
lease rent liability. Advance lease
liability
rent
account
liability debit to
lease rent. P&L bracket.
lease rent income. Shall I write lease rent income?
Yes, sir. Yes, sir.
What is the amount? 5,000.
5,000. 5,000.
What is the accounting entry at the end of 2 years?
5,000.
Anushi, what is the accounting entry at the end of 2 years? Now I need to refund 15,000 rupees. I need to get back my mobile phone. I need to repurchase my mobile phone and I need to refund 15,000 rupees. So what is the accounting entry?
Deposit liability.
Deposit liability account to bank account.
Very good. Deposit liability account debit to bank account. How much? 15,000 rupees. Yes. Right. So are you guys clear on the accounting part? Are you guys clear on the accounting part? Yes or no? Please tell me.
Yes.
Very much clear or not clear? Clear hai na?
Clear.
Yes, sir. Clear.
Clear in mind or clear from mind?
Clear in mind.
In mind.
Clear in mind. Very good. Very specific. Yes. So this is the accounting. This is the accounting in case of forward agreement and call option in the books of the seller. In the books of the seller. This standard is applicable in the books of the seller because it is the seller who is recognizing the revenue. This standard is not applicable in the books of the customer, but this is a customer centric standard. Right? Now coming to the put option. What is meant by put option? क्या मतलब होता है put option का? Put option means seller has a obligation only when the
Customer request.
when the customer request, when the customer wants to sell, right? So now put option. So in case of put option, if it is likely that customer will exercise the put option. If it is likely that customer will exercise the put option. Customer put option exercise karega, then what will be the accounting? So think logically, if you think FR logically, FR will be one of the most simplest and one of the most scoring subject for you. Believe me. So I have scored, and at my time, I have qualified in 2007. How many years back?
18 years back.
18 years back, right? So 18 साल पहले मैंने qualify किया था. And my score in FR was all India third highest with self preparation. I haven't taken any coaching class, right? Self study. But when I was learning FR as a student, accounting as a student, I always understood by heart what is the logic behind it. Why? Right? So when you understand FR in that way, you will never forget FR. And believe me, this is kind of a subject which will help you in your practical life also. Okay. When you reach to the industry, when you join controllership profile or financial reporting profile, so these concepts will help you there as well. Friends, now just think about customer has the put option, and it is likely, there is a high probability that yes, customer will exercise the put option, means customer will come to the seller and customer will ask, please purchase the asset. So if customer will say, please purchase the asset, then whether the seller has any choice?
No, sir.
No, sir. He has to purchase it.
He has to purchase it. So if it is likely that customer will exercise the put option, then what will be the accounting? Then the same accounting what we have read in the forward agreement and call option. In this case, if repurchase price is greater than the original selling price, then it will be a financing transaction. If repurchase price is less than the original selling price, then
It is a lease.
Transaction. Same accounting. will be followed, as in forward and put option. Same accounting will be followed as in forward and put option. सही है ना? लॉजिकल और नॉट? सिंपल सी बात है. Repurchase जब करना है, it is likely that the customer will exercise the put option. Customer will come to me. I have to purchase. So now this transaction will become my forward or a call option transaction from the accounting perspective. Yes?
Yes, sir.
Yes? Clear?
Yes, sir. Clear.
Okay. So repurchase price is greater than or equal to the expected market price of the goods at a repurchase date. Means if so, when it is likely that customer will exercise a put option. For example, today I have entered into agreement and given the put option to the customer that, dear customer, if you wants to sell me, I have to purchase after 2 years and the price will be 25,000 rupees. Okay, everything was agreed. The only thing is it is discretionary at the wish of the customer. So it is highly likely that customer will exercise if the price what he will get is more than the price which is prevailing in the market, right? वो करेगा ही ना exercise. और मेरे पास कोई option है नहीं. I don't have any option. If he want to sell, I have to purchase, right? Okay. If it is unlikely, if it is otherwise means it is unlikely that the customer will exercise the put option. Now, what should we do? If it is unlikely that customer will exercise the put option. तो क्या है ये? It is just like a
normal sale transaction.
It is just like a sale transaction with a right of return, to the seller. In that case, you have to do a sale transaction with a right of return. जैसे हमने right of return में देखा था ना कि what is the probability. For example, I have sold goods to 100 customer with a repurchase right. Okay, with a repurchase right, with a put option means the right of refund is with customer. And of course, when he will come, I have to Amazon. You are purchasing goods from Amazon, and there is a return clause for 14 days. Now tell me, it is on whose discretion? Seller discretion or your discretion as a customer discretion?
As a customer discretion.
Customer discretion.
On the customer discretion, within 14 days, if you want to return, you can return. If you don't want to return, you should take the goods with you. Simple, right? So if the entity has sold 100 goods to the 100 customers with a put option right to repurchase, in that case, the entity will look that what is my probability out of 100 customer. Let's say I have only 10% probability that the 10% customer will come to me for sale, for example. So it is more like a sale with a right of return. Because I don't know whether that customer will come or that customer will come. I don't know whether Saminathan will come or Anushi will come or Ankit will come or let's say Leela will come or Chitra will come. I don't know, right? So in a portfolio, I estimate 10% of the goods will be returned to me. So it is more like a sale with a right of return. You remember sale with a right of return? This we have done. किया था नहीं किया था हमने?
किया था.
Yes, sir. We have done, sir.
चलो मैं आपको दिखा भी देता हूं. कहीं आप बोलो नहीं सर आप तो झूठ बोल रहे हो, आपने नहीं किया. Right to return. Accounting entry in case of right to return. Cash account debit to refund liability to revenue, right? So this is what we have done. Cost of sale, okay? Scenario 1, scenario 2. This all scenarios we have done. And this question is in the study material also, right? Okay, so friends, we understood the accounting of repurchase agreement. Now, let's discuss a question on the repurchase agreement. आपको अच्छे से समझ आ गया repurchase agreement?
Yes, sir. Very much clear, sir.
Very much clear? Very good. Friends, are you enjoying the session? So till now, I took more than 10 classes till now. So how did you like those classes? Any feedback for those classes? You liked it or you don't liked it?
I liked very much, sir.
Liked it
Sir,
very, very much. Sir.
amazing. Each and every concept is clear.
Okay, very good.
Thank you so much.
It never feels like that there it's not a private class. It feels like it's a private class with a better understanding and grasping of the concept.
Very good, great. Yes.
Yes, sir. I really liked and loved your teaching and giving examples. It is amazing, sir. Actually, we like no. See, you are gifted actually to us.
Thank
Thank
you
you
so
so
And
much.
much.
it also never feels that we are not connected with you, or only you have explaining the topics.
Yeah. Thank you so much. Thank you so much. And this feeling is mutual. So I also think that, since it's 10, 11 classes and the students are common students. So every day you guys are there. So I feel like that, I'm teaching privately and I have a connect and bond with all of you. Right. It feels like that. Okay. Let's understand this example. Manufacturer of Caesar lift equipment. So this is kind of a lift. Okay. At times, what happens? At times in your examination question, the name of the product is very complex. And don't get into that. Whether it is a scissor lift, or it is a knife lift, or it is a spoon lift. Forget about that. It is a lift. Okay. So don't waste time on this product. That what kind of product? Manufacturer of scissor lift equipment enters into an agreement to sell 6 scissor lifts. Okay. The agreement includes an obligation of the manufacturer. What kind of agreement is this? Seller का obligation है.
Forward.
Forward.
Forward agreement. Okay. The agreement does not include a right, it includes an obligation of the manufacturer to repurchase the Caesar lift equipment from the customer in 3 years for 70% of the original purchase price. In substance, a forward contract. Question has already told you. So this agreement, day one, this agreement says that the seller has to repurchase the lifts after 3 years. And what is the price? 70% of the original sale price. If the price of if the original selling price was 100, then what is the repurchase price?
70.
70 is the repurchase price. So repurchase price is lower than the original selling price or higher than the original selling price?
Lower than the
Lower
original.
Lower than the original selling price means this manufacturer, this seller has collected 100 rupees and will return 70 rupees, right? And this manufacturer has given the lifts for usage for 3 years. So what kind of transaction is this? Is it a sale purchase transaction or is it something
Lease
else?
transaction.
Is it a lease
Lease
transaction?
transaction.
It is a lease transaction. So this customer has paid 100 rupees. 70 rupees this customer has given as a deposit, security deposit. And 30 rupees this customer has paid as a advance lease rental. Okay. So in 3 years, this advance lease rental of 30 rupees will become a lease rental income for this manufacturer. And at the end of 3 years, this manufacturer will refund the deposit and get back the lifts. Okay. Since the obligation is to repurchase the asset at a price lower than the original purchase price, the transaction is accounted for a lease. I hope this example is also clear. This example is also clear, right?
Yes, sir.
Yes, very much. Now let's discuss one illustration from ICAI study mat also. So let me take you to the ICAI study mat. Illustration number 66. I hope it is visible to all of you.
Yes, sir.
Visible.
Yes. An entity enters into a contract with a customer for the sale of a tangible asset on 1st January for rupees 1 million, means 10 lakh rupees. For rupees 10 lakh. 1st January for rupees 10 lakh. Okay. Yes. The contract includes a call option. Means, what is meant by call option? Who has the right to
Right to
purchase?
seller has the right to
Seller
repurchase.
has the right to repurchase.
Seller has a
Right to
Right to
purchase.
repurchase.
seller has a right to repurchase. Seller has a right to.
Mandatory.
Yes. नहीं. In forward agreement it is mandatory. अगर mandatory होता तो word use is obligation. Right. Here it is a call option. What is meant by option? Whether options are mandatory?
No, the options means there is
Right.
chance.
Means the seller has the right. If tomorrow seller does not want to purchase, seller can leave that. Right. So on the day one, what happens if it is a call option and seller is reasonably certain that the seller is not going to buy? Then it is just like a sale transaction. It is just like a sale transaction. Okay. Are you getting me? I have the
Yes,
call
sir.
option. I am the seller. So I have sold this mobile phone to Sanjay. And our agreement is, I don't have a forward agreement. Okay. I have entered into a call option. I told Sanjay very clearly, Sanjay, this is the call option. After 2 years, if I want to exercise, I will pay you 25,000 rupees. If I don't want to exercise, then leave it. Okay. Sanjay said, okay, sir. And when I will recognize this transaction on the initial recognition on the day one, when I'm entering into a contract, when I'm collecting a money. So if me as a seller, right, I am reasonably certain that I'm not going to exercise the call option, then it is as good as a sale for me. मेरे को
Yes.
पैसा आ गया और फ्यूचर में अब मुझे कभी वो गुड्स वापस नहीं लेना. Yes or no?
Yes, sir.
It is
Yes,
as
sir.
good as sale for me, na? Right?
Yes.
So call option is an option, but if it is reasonably certain that I'm going to avail the call option, okay, the accounting is just like a forward agreement. The contract includes a call option that gives the entity to right to repurchase the asset for 1.1 million on or before 31st December 2001. So what is the original selling price?
10 lakhs.
10
10
lakhs.
lakhs.
What is the repurchase price after 1 year?
11
10
lakhs.
lakhs.
11 lakhs.
11 lakhs, 1.1 million. So repurchase price is more than or the less than the selling price?
More
Greater
than
than.
the original.
More than the selling
Greater
price.
than. Repurchase price is greater than the original selling price. So what kind of contract is this?
Financing transaction.
It's a financing
Financing
transaction.
transaction. Me as an entity, I have collected 10 lakh rupees. I have hand over my goods, my asset, tangible asset to the customer. The customer, then after 1 year, I will go to the customer. I will pay 11 lakh rupees and get back my asset. Means I have received a loan of 10 lakh rupees and I have given a mortgage. I have given my asset as a mortgage for 1 year. I will pay 11 lakh rupees and release my asset. Right. So this will be a financing transaction. And I have already told you the accounting entry in case of financing transaction, right? So
Yes.
we did 2 illustration from this repurchase agreements. Okay. Is that absolutely clear? Very good. Very good, my dear friends. Now, friends, let me talk about the contract cost, because 2-3 students have requested me to ask my 2-3 students have requested to again revisit the concept of contract cost. So let me explain the contract cost. Should I do that? Contract
Yes, sir.
cost? Okay.
Yes,
very
sir.
good. Very good. While I have quickly covered that concept, but let me cover that concept again. So friends, this in the last class, when we discussed the recognition of revenue at a point in time and over the period of time, you remember we discussed 3 concepts, that this standard talks about the guidance on the recognition of revenue over the period of time. So when you recognize revenue, when the control will be transferred, when the performance obligation will be satisfied, and we discussed 3 concepts, that if any of the condition will be satisfied, then it will be considered that the control has been transferred over the period of time. performance obligation has been satisfied over the period of time, and revenue has to be recognized over the period of time. What were the three pointers? कौन से 3 points थे?
The entity transfers the service to the customer and customer takes the benefit immediately.
Yes,
Then
very good.
second one was the contract to create an asset which was under the possession of the customer
Under
or
the control of
the
the customer. Yes.
yes. And third one was entity creates an asset without any alternative use and has the right to get the payment.
Awesome. Great. Believe me, I was not expecting this kind of explanation. I was expecting the explanation, but not crystal clear word to word, not this kind of explanation. Awesome. Yes.
Thank you, sir.
You're absolutely right. 3 conditions we have discussed, that when the entity is performing or delivering the goods and services, the customer is simultaneously enjoying and getting the benefit of those goods and services. The second was the customer control the asset as it is created or it is enhanced. So it is within the possession or control of the customer. Third, the asset which the entity is creating or the goods and services the entity is providing, it does not have any alternative use, means it is specific to the customer. And the entity has a right to receive the consideration to the extent the work has been performed. Means if the work will stop in between, so to that extent, the entity has a right to recover the consideration. Okay? Very good. So friends, then we also discussed that in case of revenue recognition over the period of time, for example, in case of construction kind of a project, you remember that how you will measure the progress, input method, output method, right? Input method means, for example, there is a 1,000 kilometer of road project. Okay, it will take 5 years. It will take 5 years. Okay, and every year you have to recognize the revenue because that infrastructure is within the control of the government. You are creating an asset, road, without any alternative use. Okay, so friends, input method, as I told you, that whatever cost you have incurred, divide by the total budgeted cost, this will give you the percentage of completion, and accordingly you will recognize the revenue over the 5-year period. So when you recognize revenue, don't you think you have to recognize cost also?
Yes, sir.
Let's say if I have to construct 1,000 kilometer of road in next 5 years, so I will recognize revenue in the next 5 years. Yes. On the day one, since I was getting material at a very cheaper price, so I purchased in bulk. I have purchased in bulk quantity, and I have purchased some raw material for the entire 5 years. So should I record the expense or this entire expense in the first year itself?
No.
No, this has to be apportioned over a 5-year period in matching with the
Yes.
revenue. Right? Yes.
Yes, sir.
Yes, sir.
Yeah. Or let's say I have given, so Saminathan is a interior designer, or he's an architect, and I got the design from him for 1,000 kilometer of road, 1,000 kilometer of roads, and he charged 10 lakh rupees from me. Whether the 10 lakh rupee is day one cost or the 10 lakh rupee, again, it's kind of a prepaid cost which has to be amortized over a 5-year period.
It will amortize over 5 years.
Amortize over a 5-year period, right? It is not a sunk cost because I have got the design for the entire 1,000 kilometer, not for 100 kilometer. Okay. So friends, what is my cost of contract and how it is going to be treated? Okay. There are 2 kind of contract cost. Cost of acquiring the contract and cost of fulfilling the contract. Cost of acquiring the contract and cost of fulfilling the contract. Right? One, when you have to acquire the contract, and one, you need to fulfill the contract. For example, the company has entered into a bidding, right? The company has entered into a bidding for getting a contract for 1,000 kilometers of roads. And what was the bid price? So basically there was a application fee. There was an application fee of 10,000 rupees. So the company has paid 10,000 rupees. So by putting an application, is there any certainty that the bid will open in favor of this entity?
No, sir.
No.
It is a sunk
No.
cost.
It is a sunk cost. So this money has to be invested without knowing a outcome. But once the bid will open in the favor of the entity has to pay 1 lakh rupee as a convenience fee to the government. Once the contract is awarded, this entity has to pay 1 lakh rupee to the government. If entity will not deposit 1 lakh rupee, then the contract will be awarded to the another party. So friends, but whether this 1 lakh rupee is a sunk cost? Answer is no. This is a cost of acquiring the contract. Yes or no?
Yes, sir.
So when the entity has paid 10,000 rupees, the entity was not aware whether I will got the contract or I will not got the contract. 10,000 rupees has gone. But entity is aware that if I will pay this 1 lakh rupee, I will get the contract. Right? Hai na?
Yes, sir.
Yes or no? So 10,000 rupees is not the cost of acquiring the contract. 10,000 rupees is a sunk cost. But 1 lakh rupee is a cost of acquiring the contract. Now the contract has awarded, the entity has paid 1 lakh rupee. Now the entity has to construct road for 1,000 kilometers. So for constructing a road for 1,000 kilometers, this entity has to pay for the labor, material. The entity has to get some equipment on leases. आपने देखा होगा ना वो जो डंपर होता है, रोलर होता है. You have seen the dumper, roller, lot of equipment at the time of construction of the roads. You must have seen the construction of the roads.
Yes, sir.
Yes, sir.
Yes, sir.
देखा है ना?
The mixer.
Visualize करो आपने कहाँ देखा और कब देखा. When you have seen that, visualize. Okay. So what is those cost? Labor, material, lease rent of dumper, roller. What is those cost? Those are the cost of fulfilling the contract. Those are the cost of fulfilling the contract. Is that clear? Is that clear? So are you clear on the cost? For example, so let me write this example here so that it will be there forever in your Excel file. Saminathan is asking, sir, what was your score in financial reporting? So my score at that point of time was 86 marks. And at that point of time, the highest marks was 89.
Great, sir. 86 is very good marks.
So at that point of time, the rank, and I was behind 4 marks from the rank, and I secured around 57%. So 57 or 50, 58% around. Yes. So if I would have got 3 more marks, so I would have secured All India 50th rank. So at that point of time, marks was very limited. Not so much of marks was coming at that point of time. The result was 7%, 6%. This was the result. Okay. Yes. So an entity has submitted an application to express the interest in a bid and has paid an application fee of rupees 10,000, right? To 10,000 to participate. This is a non-refundable fee and paid by all the applicants to participate. Once the bid will, if the bid will open in the favor of the entity. This entity needs to pay 1 lakh for securing the contract. Okay. Once contract is secured, the entity needs to pay for the labor, material, etc. to complete the contract. Advise: what is the nature of the above costs? Batao, what is the nature of the above cost? Example. Tell me, what is the nature of the above cost?
10,000 is sunk cost.
Analysis. Rupees 10,000 is rupees 10,000.
Cost of acquiring the contract.
So bid application fee. Is it the cost of acquiring the contract? Bid application fee is a sunk cost. To be charged to P&L at the time of incurrence. Right? Without any outcome, you know this 10,000 is gone. Right? This 10,000 is gone. Then what? Cost of securing the contract. Cost of securing. So contract securing fee. So once the contract is awarded, now you have to secure the contract. Contract securing fee. What is this fee? Rupees
1 lakh.
1 lakh. Is it a sunk cost? It's a
Cost of acquiring the contract.
Cost of acquiring.
Yes, cost of acquiring contract, acquisition cost. Cost of acquiring the contract. Very good. So what happened with this cost? If it is a cost of acquiring the contract, it is an
A
incremental
portion
cost.
over 5 years.
Yes. Recorded as an asset. Asset means WIP, prepaid, right? Recorded as a work in progress asset or a prepaid asset and amortized over 5 years. So let me write, once the contract is secured, the entity needs to pay, and just a minute. So let me write the contract term also, right? Otherwise, after 6 months, you will think from where this 5 year has come. The contract period is 5 years. है ना? ठीक है?
Yes, sir.
Now, labor, material, etc. cost. Once the contract is secured, once the contract is secured, yes, so let me write the cost of labor, material, etc. will be approx 7 lakh rupees, right? Approx 7 lakh. So what is this cost of 7 lakh rupee? This is cost of
Fulfillment of contract.
Fulfilling the contract.
Cost of fulfilling the contract.
Contract fulfilling cost. Okay. And what about this contract fulfilling cost? If these costs are covered by other Ind AS, for example, let's say I am the entity and I got the data outsourcing services. I got the outsourcing services, right? So the companies are storing their data in my data center, okay? And this contract is for 5 years. So for that purpose, I have constructed the data storage facility. I have constructed the data storage infrastructure. So this kind of a cost, and of course, I have constructed my data storage infrastructure, and this is for the purpose of providing this data center facility to my customer. So whether these kind of cost, right? So what is the nature of these kind of cost when I'm creating a tangible asset?
Sir, it will be capitalized.
It will be capitalized as a PP&E, right? Property, plant and equipment. Or let's say I have purchased a software to provide the services to my customer to fulfill the contract. So what is the nature of this software? Intangible asset, right? So if you are incurring a cost for the fulfillment of a contract, if you are incurring a cost and that cost result in an asset, right? For example, for teaching you guys, I have purchased a laptop. So why I have purchased a laptop? I have purchased a laptop to teach you guys, to fulfill my contract with the ICAI, for example. ICAI has given me a contract to teach you guys to deliver classes, and to deliver classes, I have purchased a laptop. So purchasing a laptop is a contract fulfillment cost. But this laptop, what is the nature of this laptop? This laptop nature is PP&E, property, plant and equipment. So this laptop has to be capitalized as a Ind AS 16 property, plant and equipment, and has to be depreciated over the useful life. Really clear? Clear?
Yes, sir. Clear.
Yeah. So at the same time, and now coming back to this example. So let's say for fulfilling this contract of construction of roads, I have purchased a crane. मैंने crane purchase की. So what is the nature of that crane? I have purchased a crane to fulfill my contract of constructing 1,000 kilometers of road. But what is the nature of crane?
It is PPE.
It is PPE, property, plant and equipment. It is a fixed asset. It is going to be capitalized and the accounting has to happen as per Ind AS 16. Clear है ना? कोई doubt तो नहीं है इसमें? I believe you don't have any doubt. Clear है ना?
Very much clear.
So
Yes, sir. Clear.
just visualize. While constructing a road, you have seen that dumper, you have seen that roller, you have seen that crane, you have seen that material, you have seen that labor, right? But what about material and labor? What about material and labor? If these kind of costs are not covered by Ind AS 16, Ind AS 38, then
It will cover under Ind AS 15.
Ind AS 115.
115. Then these contract fulfillment costs recorded as a WIP, asset, work in progress, and amortize over 5 years and amortize over the contract term, right? Amortize over the contract term. Correct? As I told you, na, on the day one you purchase the entire material. So will you recognize as a cost in the day one? Answer is you have to record as a work in progress asset and then you need to release the cost. Okay. So this is the concept of the cost. And now let's again discuss illustration number 73. Again, customer outsources its information technology data center. Term is 5 year plus 2 1 year renewal option. Average customer relationship is 7 years. So if average relationship 7 years and the term also allows 5 year term and 2 1 year renewal options. So what is the total term? What is the total term?
Total 7 years.
7 years. Expected term is 7 years. Entity spent 4 lakh rupees designing and building the technology platform needed to accommodate outsourcing contract. This entity is spending 4 lakh rupees for fulfilling the contract. Now, what is the breakup of this 4 lakh rupee? Design services 50,000 rupees. Hardware 1,40,000 rupees. Software 1 lakh rupee. migration and testing of data center 1,10,000 rupees. Total is 4 lakh. Now tell me whether this design service, is it a sunk cost or is it a cost of fulfilling the contract?
Cost of fulfilling the contract.
So what is the treatment of this 50,000? Expense on the day one or amortize over a 7 year period?
Amortize over 7 years.
So this design service has to be deferred and amortized over a contract period of 7 years. Means WIP asset. अगर defer करना है तो क्या करोगे? Prepaid asset बना दोगे, right? What about this hardware? What about this hardware?
This is PPE.
This is
Property, plant,
PPE. Yes, this is a property, plant and equipment, and it has to be capitalized as per Ind AS 16 property, plant and equipment. What about software?
Intangible assets.
This has to
Capitalized.
It has to be capitalized as per Ind AS 38. It is an intangible asset. What about migration and testing of data center?
It is a cost of acquiring the contract, so it has to be amortized over a period of 7 years.
Deferred and amortized over a contract period of 7 years. Okay. I hope now you guys are very much clear on the cost of acquiring the contract and cost of fulfilling the contract. Now I believe you guys are very much clear and you guys understood that how this is going to be accounted for. Yes. Yes or no? So
Yes,
let me complete this part. Let me add one more thing in this example. The company, the entity has purchased a crane for the purpose of completing the contract. ठीक है ना? Completing the contract. So the company has purchased a crane for the purpose of completing the contract for rupees 15 lakhs. Crane cost. अब ये complete हो गया. Yes. Now when you see this Excel file, you will always be able to remember. This is a contract purchased for contract fulfillment, but whether it will be amortized, over 5 years, capitalized.
No, sir.
No, so it has to be capitalized.
As a PP.
Tangible assets.
Ind AS 16 and treated and depreciated. Not over the contract term, depreciated over the useful life of crane, not the contract period, right? अब ये complete हो गया example. So I have given you the concept. I have explained you the concept. This is a comprehensive example. This is analysis, and this is illustration number 73 of ICAI study material, complete package, right? The package is complete. Complete planning the package.
Yes, sir. Complete.
Package is complete. Okay. Yes, friends. Now we are entering into the last concept of Ind AS 115. Believe me, Ind AS 115 is a very lengthy standard. Very lengthy standard. Ind AS 115, right? That is why, friends, just allow me. Yes, this 115 is very lengthy standard. That is why ICAI has given 6 classes, 18 hours for this 115. Lot of concepts are there. So at the end of the session, I would request all of you to please be ready with the pen and paper. Okay. I will just let you know all the important concepts in one go. Just write down those concepts. Okay. And when you revise this standard, just ensure all the concepts have been ticked off and all the illustration from those concepts have been captured. Right. So when you listen these videos, when you go with the Excel file and the PowerPoint presentation, you will find all the concepts along with the illustrations. Okay. But this is what you have to do as a homework. Believe me, minimum 8 to 10 marks question you can expect from Ind AS 115 minimum. And this standard is not only important from exam perspective, this standard is very, 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 very important from the real life perspective as well. Okay. So friends, now I am moving into Appendix C, Ind AS 115. Friends, there is a standard, and after the standard, there are some appendix also. Appendix is nothing, it's a part of the standard. So, this Ind AS 115 also talks about accounting in case of service concession arrangement. Have you heard about this word service concession arrangement? So, before Ind AS 115, the accounting in case of service concession arrangement was not there in India, right? So, while this concept was existing, but accounting guidance was not there. And Indian companies which are having this service concession arrangements, they are following the IFRS model or the out of India model for the purpose of accounting. In India, there was no accounting guidance on service concession arrangement prior to introduction of Indian accounting standard. In Ind AS 115, it takes care of service concession arrangement accounting. What is meant by service concession arrangement accounting? What is meant by service concession arrangement accounting? Any idea?
Sir, when we see example, when the government wanted to build a road for 1,000 kilometers, in that case, the capital outlay is huge. In that case, that anybody will come for that, and they will invest money to build the road. Upon building the road, what they will get, the benefit out of that, they will install the toll plaza. They will collect the fee from the vehicle going on the road. Say example, 25 years, 30 years. This contract is called service concession arrangement.
Absolutely awesome. Yes. So from today onwards, you know what is your homework from today onwards? Whenever you cross the toll plaza, whenever you cross, just see that what is the name of the company which was written on the toll plaza. When you got the receipt, just see what is the name of the company whose name was printed on the receipt. Ask that the toll collecting guy that what is the name of the company which is maintaining and have constructed this toll plaza. You will be surprised to know that the toll plaza is constructed and maintained. The road is constructed and maintained by Sri Dharam Chandra Constructions Private Limited. So this infrastructure belongs to government. The road belongs to government. The infra belongs to government, and it is for the public users, right? It is for the public. But who has constructed? Sri Dharam Chandra Construction Private Limited has constructed. So whenever you get a chance to visit Delhi airport, Mumbai airport, right? Ask who is maintaining Mumbai airport. You will be, and so whether these airports are private property or the government property. Airports are government property, right? But who is maintaining Mumbai airport? You will be surprised to find that Mumbai airport is maintained by Adani. And Adani is a government entity or private entity?
Private.
Private entity.
It's a private company. And when you visit Delhi airport, you will be surprised to know that Delhi airport is maintained by GMR Infra. Whether GMR Infra, it is a private entity or a government entity. GMR Infra is a private entity, right? So my dear friends, government also has a limited funds. Government also has a limited funds, right? So if government has to develop public infrastructure, so government comes to a private party and government says, please participate, please partner, please participate for the purpose of development of public infrastructure. Then the private party will ask, okay, I will participate, but what I will get in return? So the government will say that either I will give you fixed amount of consideration or I will give you a right to collect the consideration for a longer period of time, like Swaminathan told, for 25 years, 30 years. For example, the government will say that please construct a road from Delhi to Jaipur, a highway from Delhi to Jaipur, and this highway will be 100-kilometer highway. And this private company told that, I have to spend 500 crores for development of this Delhi to Jaipur highway. So what I will get in return? So government told that you can put on this 100 kilometers of highway, you can put your 5 toll plaza. And I am giving you a right to collect toll for the next 25 years. So whatever money you will collect, it belongs to you. I'm giving you right to collect toll, right? So this will be your income. So of course, the government will tell you that what is the quantum of the daily commuters, and you are also expecting, for example, I will be able to collect a toll. And what happened at times when you go to highway, and government is very smart, and even the private players are very smart. When you have already come on highway, probably you will not get the exit for next 30-40 kilometers, right? And in between you get 2 toll plaza. So means one, you have already on the highway, you have to pay the toll plaza. You have to pay the toll, right? Means this private player is also expecting that, okay, 1 lakh commuter will be on daily basis. Everybody will pay me 100 rupees, right? So I will be able to collect 1 crore rupees of toll every day, for example, right? So in 1 year, I will be able to collect 365 crores. I have a maintenance cost also. I need to maintain this road infra also, right? So this private player is also expecting, okay, at an average of 1 crore rupees, I will get this toll for next 25 years. And of course, I have to make an initial investment of 500 crores. And I also require to maintain this highway. So I have to incur a maintenance cost also. I have to incur a one-time cost, construction cost also, and I will get the return in terms of right to collect toll. Are you able to understand what I'm explaining? Are you able to understand? Yes. So
Yes, sir.
friends, this service concession arrangement comes into a picture when the government or a government entity gives a contract to the private party, and it is known as a public private partnership, PPP. Have you heard about triple P model? Have you heard
Yes,
about
sir.
triple P model?
Yes, sir.
It is known as a public private partnership. Public means government, private means private entity, and partnership means both are joining their hands, and the infrastructure belongs to the government. The private entity is paying the money to construct and maintain, and the private entity is getting a fixed amount of consideration or a right to collect the consideration, right? So friends, the government or government entity is known as a grantor. The government or government entity is known as a grantor. So in your question, the word grantor may be used. So what is meant by grantor? Grantor is a party who grant the project. Grantor. And the private party is known as the operator. Who is the operator? Operator is a party who operate the project, who operate this thing, right? So clear, grantor and operator. Grantor is a party who gives the contract, for example, government or government entity. Operator is a party who construct or maintain the project, like private party. Okay. So government gives a contract to the private party to develop the public infrastructure, to maintain the public infrastructure, to upgrade the public infrastructure, right? And this public infrastructure is for providing service to the public, right? Have you heard about AIMS, All India Medical Service? Have you heard about AIMS?
Yes, sir.
Yes, sir.
Whether AIMS is a government hospital or a private entity hospital?
Sir, government attached private hospital.
It's a government hospital. So nowadays, and of course, this hospital, there is a lot of investment which is required in constructing a hospital. Number one, hospital building. Number two, lot of equipments, etc., etc. So government has limited funds. So government went to Ambani, and government told Ambani that will you please participate in construction of AIMS in Mumbai? in 10 acres. So Ambani said, okay. So what will be the cost? So government said, okay, probably the cost will be 1000 crores. Okay. So Ambani said, what will I get? Why I should invest my 1000 crores? So government told Ambani that two models. One, your cost will be 1000 crores. We can pay you 1100 crores, for example. Fixed consideration. Second, I will give you a right to collect money from the OPD charges or from the surgery charges. So whatever money we will recover from the patient, you are allowed to collect 10% of the royalty, correct? For the next 10 years. Right? So it is not completely free. It is not completely free. There is a very nominal charges. When you go to the AIIMS in Delhi, so probably you have to get a OPD slip for 10 rupees or 20 rupees. 10 and 20 rupees, nothing in this current world. Okay. So whatever money has to be collected, and for example, so one of my friend who got his grandmother knee replacement. So Max, Fortis, all these hospital, Medanta, they are asking for 10 lakh rupees for surgery. But he has a good connect in government. So he got the surgery done in AIIMS at a price of 3 lakh rupees. Okay. So very reasonable, very experienced doctor. It's a government hospital. So are you getting me? So who is constructing and maintaining AIIMS? Ambani. I'm just giving you an example. To whom this AIIMS belongs to? Government, right? This building does not belongs to Ambani. Ambani will not say that this building is a property, plant and equipment for me. Answer is no. This building doesn't belongs to Ambani. Ambani has incurred a construction cost. Ambani will incur the upgradation or maintenance cost. And in return, Ambani will get either a fixed consideration or Ambani will get a right to collect 10% royalty for the collection over a period of 10 years. Right? This is which is get by Ambani. So friends, this is known as a service concession arrangement. This arrangement is known as a service concession arrangement. This is known as a private-public partnership, public-private partnership, right? So this is known as a service concession arrangement where the grantor is giving a contract to the operator, where the government is giving a contract to the private party. Okay. And have you seen all these pictures?
Yes,
Yes,
sir.
sir.
हाँ या ना तो बोलो. I have seen many people who are not
seen,
seeing.
Yes,
हाँ या
sir.
ना.
seen many times.
Many times na. Mamta?
Daily.
Daily. Okay, means you are a daily commuter. Mamta, have you seen all these pictures in real life?
Yes, sir. Real life, all the
Yes.
Yes, sir.
This is public-private partnership. Okay. So this is all theory. That public infrastructure like road, bridge, tunnel, prisons, hospital, airport, water distribution facility, energy supply, telecom network has traditionally been constructed, operated and maintained by the public sector and financed through public budget. But nowadays, in recent time, government have introduced contractual service arrangement to attract private sector participation in the development, financing, operation and maintenance of such infrastructure. The infrastructure may already exist or may be constructed during the period of the service concession arrangement. Okay. The operator is paid for its service over the period of the arrangement. The arrangement is governed by a contract that set out performance standards, mechanism for adjustment prices, arrangement for arbitrating disputes. Such an arrangement is often described as a build, operate, transfer, a rehabilitate, operate, transfer, or a public to private service concession arrangement, right? Where the government is regulating price also. For example, if the private entity is constructing and maintaining the highway, the private entity cannot fix the toll as per its own whims and fancies. The government will tell him you can collect the toll only 50 rupees, 80 rupees, 100 rupees. It's not like that you can collect a toll of 1000 rupees. Okay. So government also set the performance standard. Government also set the prices. Okay. So these kind of contract are known as a service concession arrangements. Service concession arrangements. Okay. Right. Yes. So all these are theory, whatever I have already told you. So whatever infrastructure the private party will construct, whether that infrastructure will be considered as a PPE in the books of the private party.
No,
No,
sir.
sir.
Why? Because
No,
the
sir.
right to because the right to because the control will not be with the operator. The control is with the government. So who is having the control? Whether the entity or the customer? Who is the customer? Government is the customer. So this infra
Government.
belongs to the government. ऐसा नहीं कि वो पब्लिक प्राइवेट पार्टनरशिप मॉडल में जो पब्लिक जो प्राइवेट एंटिटी है वो प्राइवेट एंटिटी रोड को ब्लॉक कर देगी. If government will not pay the money, the private entity will block the road. Can it?
No, sir.
No. Because this infra is not in the control of the private entity. It is the private entity who is maintaining, who has constructed. But the private entity does not control that infrastructure. Right? So who is controlling the infrastructure? The government is controlling the infrastructure. And hence, whatever is constructed, this big toll plaza, big buildings, so Ames building, it is not in the books of the private party, it is in the books of the government. Is that clear? Is that clear? Now, what is the accounting? So we will talk about accounting, and then we will cover a one question which was which may be asked in exam also, and it is one of the complex question given to me by ICAI. And of course this question I used to cover always in service concession arrangement as well. So I will cover the accounting, and then I will cover one illustration to support what I have explained, right? So I will also cover one illustration so that you guys will be able to understand the complete package of service concession arrangement. Friends, it's 8:27 now. It's 8:27. So let's have a 13 minutes break and we will start at 8:40. It's 8:28. We will start at 8:40. Okay. Then I will complete this topic. Okay.
Okay,
Ashok
sir.
ji, break start. and measurement of consideration. So friends, there are three things which the operator will do. Number one, the operator will provide construction or upgrade services. For example, so just day before yesterday, I went to Noida. Have you heard about Noida?
Yes, sir.
Yeah.
Yes,
So I
sir.
went to Noida and I have seen, so 3 years back when I went to Noida, I have seen few societies which were under construction, and it was, it was remaining idle like a ghost house. Ghost house means no construction, nothing. Why? Because it belongs to Amrpali. Amrpali was a company, and Mahendra Singh Dhoni was the brand ambassador of that company. He was doing the advertisement. Amrpali becomes bankrupt because the promoter has done the fraud and default, and Amrpali becomes bankrupt. So, and whose money? Whose money was impacted? Whose money? Who has lost the money? All the investors, like all the customers who have deposited for the flats, for the construction of the flats. So 3 years back, those societies were like under construction and no construction was going on. But when day before yesterday I went to Noida, I have seen the construction work was started. So I asked that Amrpali, these are the Amrpali society, and of course Amrpali already, this company is shut and Amrpali becomes bankrupt. So who is doing this? So then I got to know that the government has took over all those uncompleted projects so that public money will not be lost, right? Because it's the public money who has invested their hard earned money with a dream to have their own house, right? So government has given this contract to a private party, please complete these houses, and whatever balance money which has to be collected from the customer, please collect that, please complete the house, and please hand over the house to all the customers. It means at times the government not only gives private party to construct, it also gives for upgrade, right? For example, if you have to upgrade the infrastructure, okay, so one, construction or upgrade service. Number two, maintenance or operation service, right? So construction or upgrade service and maintenance and operation service. So these are the kind of the services the entity is performing, the entity is giving to the government, okay, and in return the entity is collecting the money from the government as a fixed consideration or as a right to collect the consideration Friends, standard says that the nature of the consideration determines its subsequent accounting treatment, right? What does it mean? So friends, if the government is giving a fixed consideration, for example, you have constructed 1,000 kilometers of road and you will maintain the road for the next 20 years, because you will, as per contract, you have to maintain the road for next 20 years. Okay. So at the time of construction, there must be a cost incurred. कोई cost आई होगी ना construction करने में भी, आई होगी ना?
Yes, sir.
Yes.
Yes, sir.
When you maintain the road, you will also have a recurring maintenance cost, which will incur every year.
Yes, sir.
Yes. Okay. So friends, if and in return, government is giving you 1,000 crore of consideration as a fixed consideration. Government is giving you 1,000 crore of consideration. So friends, if government is giving you a fixed consideration, right, and the contract cost which you have incurred, right, you have credited your bank account, for example, 900 crore worth of cost. Let's say you have spent 900 crores in construction of the roads and the toll plaza. So your bank account has credited, but what will be debited? Debit क्या होगा?
Debit what comes in that fixed consideration.
नहीं, हाँ, डेबिट क्या होगा, मतलब व्हाट विल बी डेबिटेड. सो आपका जो टोल प्लाजा आपने कंस्ट्रक्ट किया, राइट, इट इज नॉट योर पीपीएनई. हैड इट बीन अ पीपीएनई, if you would have a control, probably what entry you would have passed, you would have passed Ind AS 16 property plant and equipment account debit to bank account. But here whatever construction you have done, right, whatever construction you have done, the entire cost, whatever you have incurred. So what is the debit side of that contract cost? What is the debit side? उसका debit side क्या होगा? Friends, that is the cost of construction. That is the cost of construction. Correct?
Yes, sir.
So
Yes, sir.
whatever 900 crores you have spent, that is your cost. It is at a point in time. I mean to say, let's say it took 3 months and this roads has constructed and open for the public. So once completed, only then it can be open for the public. So assuming it's a 100-kilometer patch, and this 100-kilometer patch has to be inaugurated by Prime Minister Mr. Narendra Modi, once 100-kilometer will be completed and then only it will be open for public. So my thing is, so when this construction gets over, 900 crore rupees have been spent. So this is the cost. So cost of construction to bank. But what is the revenue? What is the revenue?
100
Revenue,
crores.
100 crore, the 1,000 crores we received from the government. Fixed
1,000 crores you
consideration.
have to receive from the government. 1,000 crore you have to receive from the government. So government told that I'll pay you 1,000 crores. So what will be my revenue? So standard says that your revenue will be the fair value of the consideration receivable will be your revenue. For example, 1,000 crore is the fair value. So standard says that your accounting will depend upon the kind of consideration you receive, nature of consideration you receive. If government is giving me a fixed amount of consideration, what kind of asset it becomes? It becomes a financial asset, right? What is the definition of financial asset? When you guys will cover financial instrument standard, the definition of financial asset is contractual right to receive cash. Contractual right to receive cash, right? So when the government will commit you that I will pay you a fixed cash of this much amount, it will become your financial asset. So what is your accounting entry? On the one side, your accounting entry is cost of construction to bank. On the other side, your accounting entry will be financial asset account debit to revenue of 1,000 crores, right? So this is the revenue recognized for the cost of construction, right? And this financial asset being a financial asset, what you will do? On this financial asset, you will recognize your finance income. This financial asset has to be measured at fair value, which is like a present value of the future money receivable. So now you have to get this present value converted into a gross value. So you have to record a finance income also on this financial asset every year. And you have to incur a maintenance cost also every year. This is how you are going to recognize your construction revenue and the recurring revenue. Now, let's come to a different scenario. For example, the government has told that we will not pay you a fixed consideration. We will give you a right to collect toll. Government is saying we will give you a right to collect toll. In that case, what will happen in that case? क्या होगा उस केस में? In that case, whenever the right to collect toll is there, there is no fixed consideration. If, let's say, if there is a kind of a, long weekend, probably you will collect a toll of 1 crore rupee. If there is a strike, if there is a Bharat Bandh, nation strike, probably you will not get even 1 rupee of toll. So instead of getting a fixed amount of cash, instead of getting a contractual right to receive a fixed amount of cash, you are getting a right to collect. So that is known as an intangible asset. So what is the accounting entry? On the one side, cost of construction to bank, and on the other side, intangible asset to revenue. And that intangible asset has to be amortized over a period. Amortized over a period, right? So let's understand this accounting with the help of an example. Let's understand this accounting with the help of an example, right? Yes. So friends, illustration number 75 of ICAI study material. This is a complete question on service concession arrangement, and with the help of this question, we will be able to understand the complete accounting. A Limited is in the business of the infrastructure and has two divisions under the same: toll roads and wind power. Toll roads and wind power. The brief details of these business and underlying project details are as follows. Bhilwara Jabalpur toll project. Bhilwara Jabalpur toll project and Kolhapur Nagpur expressway. So there are two projects which are going on, and this entity A Limited, a private party, has built two toll projects. The company has commenced the construction of the project in the current year and has incurred total expenses aggregating to 50 crore as on 31st December 2001. Under IGAP, the company has recorded such expense as intangible asset in the books of account. The brief details of the concession agreement are as follows. Whether this line is relevant under IGAP, what accounting this company was doing, whether this line is relevant. क्या relevant है ये line? हाँ या ना तो बताओ. Is it relevant, not relevant? I'm not able to got the answer from anyone.
Not relevant because we have to do the accounting as per Ind AS 115.
Ind AS, right?
And,
so this line is not relevant. Yes, you're right. So to us, what is the information? The information is the company has incurred a total expense of 50 crore up to this time, and the brief detail of the concession agreement are as follows. Total expenses estimated to be incurred on the project is 100 crore. What is the total expenses given in the question? The fair value of the construction service is 110 crore. There are two services: construction service, maintenance service. So the fair value of the construction service is given 110 crore. Total cash flow guaranteed by the government under the concession agreement is 200 crores. Total cash flow guaranteed by the government means whether this will become a financial asset or this will become an intangible asset.
Financial asset is a fixed.
Yes. So there could be only two kind of asset in these kind of arrangements. Either it could be a financial asset or either it could be a intangible asset. Okay. So total cash flow guaranteed by the government under the concession agreement is 200 crores. Finance revenue over the period of operation phase is 15 crore. Other income relates to the services provided during the operation phase. This all information is given. Right. Have you understood these information? Have you understood these information?
Yes, sir.
What about others? Have you guys understood or not understood? First of all, tell me.
Yes, sir. Understood.
Information समझ आ गई या नहीं आई?
Yes, sir.
So what all information is given in this question? क्या क्या information इस question में दी हुई है? इस question में आपको क्या क्या information दी है? On this Bhilwara Jabalpur project, this question is given you a cost of 100 crores. Fair value of the construction service 110 crores. Total guaranteed cash flow over the concession period 200 crores. Finance revenue over the operation phase, not the construction phase, over the operation phase 15 crores. And the other income, which is also relating to the services provided during the operation phase, is also given. Right? This is what is given in the question. Okay, this is what it is given in the question. So other income related to the services during the operation phase means whatever maintenance this entity is providing, right? So the entity is also getting some other income from the government. Okay, but the total cash flow is 200 crores. Is this clear to everyone? Shall I solve this question? Karu मैं इस question को solve?
Yes, sir.
Yes. So people who haven't understood this accounting, they will become master in this accounting after this illustration. Okay. Service concession arrangement. What is the name of the project? Bhilwara Jabalpur project. Bhilwara Jabalpur project. Bhilwara Jabalpur project. This project, there is a guaranteed cash flow from the government. So in this case, your nature of consideration will result in which asset?
Financial asset.
Financial asset. Why? Because financial asset is a contractual right to receive cash. Okay. Contractual right to receive fixed amount of cash. And what is intangible asset? It gives you a right to collect cash, right to collect consideration. Okay. So if government is giving you right that I will pay you daily 10 lakh rupees of toll collection, that is a financial asset. Or if government will tell you, doesn't matter if it is 1 lakh, 10,000, 10 lakh or 1 crore, the entire toll belongs to you, then it is an intangible asset. You are getting a right to collect and doesn't matter whatever is the amount. But if you are on whatever toll you are collecting, government has fixed 10 lakh rupees for you every day. In that case, it is a financial asset. If you will collect 9 lakh rupee toll, government will pay you 1 lakh rupee extra. If you will collect 15 lakh rupees of toll, you will refund 5 lakh rupees to the government. Okay. So this is a guaranteed cash flow and hence it become your financial asset, and hence financial asset will be recognized. Okay. So now accounting. Now coming to the accounting. During construction period. So you have to do the accounting during construction period, during operation and maintenance period, right? During construction period. Accounting during construction period. A. Accounting during construction period. Okay. What will be the accounting during the construction period? What is my cost? What is my cost of construction? The expense which is given in the question.
I think 50 crore.
100 crores na? Oh, that 50 crore is up to a particular time.
Okay.
That 50 crore is up to 31st December. But the total budgeted expense, the total expense estimated to be incurred on the project is 100 crores.
100 crores.
Right. For the purpose of construction. So what is my cost of construction? My cost of construction is cost of construction account debit. Cost of construction account debit. To bank account. To bank account credit. How much? 100 crores. So in my P&L account, there is an expense. In my P&L account, there is an expense which came. There is an expense which came for the cost of construction. In my P&L account, there is an expense which came for the cost of construction. 100 crores. Do I need to recognize a revenue also? I need to recognize income also. इनकम भी रिकॉग्नाइज करूंगा नहीं करूंगा? अगर मैंने कंस्ट्रक्शन कॉस्ट करी है, सो इनकम भी तो रिकॉग्नाइज करूंगा. गवर्नमेंट मुझे 200 करोड़ क्यों दे रही है? व्हाई गवर्नमेंट इज गिविंग मी 200 crores? Government is giving me 200 crores for the two reasons. Tell me. Why government is giving me 200 crores? What are the two reasons?
The construct the things and also the maintenance.
The government is paying me consideration towards my construction cost as well as towards my operational and maintenance cost. Right? हाँ या ना?
Yes, sir.
Yes, sir.
Yes, sir.
Friends, when I teach, I want this class to be just like a kind of a private class. Lot of interaction, lot of engagement. I always, admire. So at least you should say yes, no, समझ नहीं आया, या please repeat. At least you should participate. Okay. Yes.
Yes, sir.
So what I have done, I have recognized the cost being cost of construction recognized. Now it is a one leg accounting. How I'll complete the two leg? Now I need to recognize cost, revenue. 2, revenue from construction service. To revenue from construction service. 2. But I haven't received the money as of now. I haven't received the money, but government has committed me to pay me what? To pay
200 crore. 200 crores.
crores. So, but 200 crore will be over the period of concession arrangement over the 20-30 years. So, should I recognize 200 crore on the day one?
No, sir.
No, answer is no. Because the money which I have spent 100 crores, that is today. But the cash which I'm going to receive, that is in the next 20-30 years. So, whether the present value of that 200 crores is same as of today, answer is no. You have to arrive at a present value. You have to recognize the revenue at fair value. So what was the fair value which is given in the question for the
110.
construction service?
110 crore.
10 crores. 110 crore.
The fair value of construction service is 110 crore given in the question.
Yes, sir.
So how much revenue I should recognize, my dear friends? 110 crore revenue I should recognize, but I haven't received the money. So what should I debit? Financial asset. Financial asset account debit 110 crore. I hope you have understood this concept of how to recognize the revenue, right? And on the right side, your revenue from construction service will come. Revenue from construction service will come. Right? And what is the revenue from the construction service? 110 crore. So you got the benefit of 10 crore, profit of 10 crore due to your construction activity. Okay. Now, what next? What next? Agla kya hai? There is a finance revenue also. You remember the finance revenue was given, that 15 crore rupees was the finance revenue.
Yes, sir.
Yes, sir.
Right to collect.
Interest income. So what is my recognition of finance revenue? Finance revenue means you have to recognize interest income. What is the accounting entry? 2 interest income, 2 finance income, right? What is the accounting entry? Credit to 2 finance income कर दिया, debit क्या करें? What should I debit? What should I debit?
Intangible asset.
How come it is intangible asset? This is financial asset. अगर आपको डेटर से इंटरेस्ट आना, डेटर को ही तो डेबिट करोगे. You have to receive the money from the customer. 110 crore is the present value, right? So you have debited your financial asset debit, 110 crore. Then you have to collect 15 crore rupees of interest on the financial asset. Okay. So 15 crore is your financial asset, and 110 plus 15, it become 125. But how much amount you have to receive from the government? कितना चाहिए आपको?
200.
200 crore.
200. So what is the remaining amount of the financial asset
70.
now during operation period? You remember there was a
75
line which was written, you remember? The line was other income pertains to the operation services. So what is my during operation period? 2.
Okay. Other
revenue,
income. Right.
To revenue from operation services. Credit. How much? 75. What will be debited?
crore.
What will be debited? What will be debited?
Financial asset.
Financial asset.
Again, customer account, right? Government account, customer account, financial asset, 75 crore. Now, what is the balance in the financial asset? What is the balance in the financial asset? 110
200.
plus 15 plus 75, 200.
20 is balance.
Right? So then you will receive the money from the government, bank account debit to financial asset. इतना ही था ना, 200 crore was there ना?
Yes, sir, 200 crores. Got it, sir.
Udandam, have you understood?
Yes, sir, I have.
Ankit, Sanjay,
Yes, sir.
Yes,
Understood.
sir, understood.
Chitra, Mamta, Naman,
Yes, sir.
Saminathan, Saurav,
Yes, sir. I initially that 75 crore, no, why we are debiting the financial asset. Now I understood, sir.
Leela, Omkesh, Bibhu. Yes, everybody have understood? Very good. So this financial asset is nothing, debtor. Debtor is a financial asset, right? And why you are debiting debtor? Because you got the certainty that this much money you will going to collect. There is a guaranteed revenue, guaranteed amount. Okay. Now let's go to the second. Let's go to the second question. Let's go to the second part. Kolhapur Nagpur Expressway. The company has also entered into another concession agreement with Government of Maharashtra in the current year. The construction cost for the said project will be 110 crore. What is the construction cost?
110 crore.
Okay, important information. Please remember this information. The fair value of such construction cost is approximately 200 crore. The fair value of the construction cost is given, fair value. The said concession agreement is toll-based project and the company needs to collect the toll from the users of the expressway. The company needs to collect the toll from the user of the expressway. Under ICAI, UK Limited has expenses incurred on the said project as an intangible asset. Doesn't matter. ICAI में क्या किया छोड़ दो. What would be the classification of Bhilwara Jabalpur toll project as per the applicable Ind AS? Give brief reasoning of your choice. What would be the classification of Kolhapur Nagpur Expressway toll project as per applicable Ind AS? Give reasoning. Also suggest suitable accounting treatment for preparation of financial statement as per Ind AS for the above two projects. Friends, in this question, Kolhapur Nagpur, the budgeted cost of construction is given 110 crore. The fair value of the construction cost is also given 200 crores. Whether anywhere this question says that there is a guaranteed cash flow?
No, sir.
What it says that the company needs to collect the toll from the user of the expressway, user of the highway. It means, what is the nature of the consideration?
It is intangible asset. Right to
Intangible
receive.
asset. It is getting right to receive, not the contractual to right receive fixed cash. It is giving you right to receive cash. Correct?
Yes,
Correct
sir.
me? Correct. Okay. Yes. Now, what is the accounting entry? What is the accounting entry for Kolhapur Nagpur Expressway? Kolhapur Nagpur Expressway. Kolhapur Nagpur Expressway. Kolhapur Nagpur project. Okay. Now, in this case, there is a right to collect the consideration, not the fixed amount. Okay. So here, what is the nature of the will result in which kind of asset?
Intangible assets.
Intangible asset.
Intangible asset. Right? Intangible asset. Now friends, what is the accounting? I hope my Excel file is visible. Now, what is the
Yes, sir.
accounting?
Yes, sir, visible, sir.
Accounting क्या होगी इसकी? What is the accounting? Tell me, guys. What should be the accounting? Cost की
Like the
accounting
first
बताओ.
one would be cost of
पहले
construction to bank.
cost of construction to bank by what amount?
110
10
crore.
crore.
110.
110 crore. 110 crore is cost of construction, which will go to the P&L to bank, right? So let's write this accounting entry. Shall I copy this accounting entry from the upside?
Yes, sir.
Yes, sir.
Instead of 100, I'll make it 110, correct? And also let me show you the P&L also, okay? So that you will get the complete picture. ठीक है ना? Picture अभी बाकी है मेरे दोस्त. Okay, and this will be your 110 crores is the cost. It will go to the P&L. Okay. Yes. Now, what is the next entry? What is the next entry?
Revenue booking.
You have to recognize revenue from construction service. So revenue from construction service. How much amount? 200 crores.
crore.
Fair value is
Fair.
what will be
Yes.
debited?
Intangible asset.
Intangible asset. $200 crores. So what is my revenue? Revenue is my 200 crores. Okay. Being revenue recognized on the basis of fair value. Now, what is the next entry during the operation phase? What is the next entry during the operation phase?
We will collect the amount from the.
Yes, very good. Yeah, during operation phase, what you will do? You will collect the amount. You will collect the toll.
Yeah, from the
Collection
users.
of toll. Right. What is the accounting entry for collection of toll?
Bank account
Account
debit.
debit to intangible asset.
Bank account debit.
Intangible
Intangible
assets.
asset will not be credited. Intangible asset has to be amortized. Intangible asset को क्रेडिट थोड़ी करेंगे. Intangible asset तो मैंने जो कंस्ट्रक्शन की है उसका बनाया है, right? So you have to amortize intangible asset over the period of service concession arrangement. Okay. So whenever you collect toll, what accounting entry you will pass? Whenever you collect toll, so you will pass an accounting entry bank account debit to revenue. This is the revenue for the maintenance period, because you have to do maintenance also, na? Right? So this is XXX. I don't know the amount. And the second is amortization of intangible asset. Amortization of intangible asset. Amortization of intangible asset. So every year you will have a amortization expense also.
Sir, we have credited the revenue also in the during the intangible assets recognition, and here also we are doing the.
So
Again.
that is related to construction service. You remember in the question it is written, na? So you are providing two kind of service. Saminathan, just think you like a contractor. I am the government, you are the contractor. So I came to you and I told Saminathan, you have to build a highway in Chennai for 100 kilometers. What will be your cost? Tell me.
Right, sir. Now I got it, sir.
So your construction cost will be there. You have to construct. One time cost will be there, na?
Right, sir.
You have to construct the road. You have to construct the toll plaza, building. So you will say, sir, I have to incur 110 crores upfront. I said, okay. What else? You told that, sir, I need to also maintain this this entire project for 20 years. So I have a recurring annual maintenance cost also, operation cost also, right? So you are giving me two kind of service. I am the government. You are giving me two service. One, construction service. Second, maintenance. And you know, at times what happened? At times, The government can split the contract also. For example, the government is not getting a party who will operate and who will construct. So government said that I am inviting a bid for construction of the roads, right? And I'll pay you the fixed consideration. In that case, it will become a financial asset. And government is separately inviting bid for maintaining the project for 20 years. So the other party came, government said, listen, I am giving you this infrastructure, toll plaza is there, road is there. You need to maintain this for 20 years. Your people will collect the toll. You have to maintain all the patches of this entire 100 km of road. Wherever there is potholes, you have to fill the potholes. You have to maintain the traffic light. You have to maintain everything. So the party told, but in that case, I have to have a maintenance cost. So what you will give me, government told that I am giving a right to collect toll. So in that case, it will be an intangible asset kind of stuff. Okay. So amortization of intangible asset. Well, what is amortization entry? Amortization expenses account debit. Amortization expenses account debit.
To
To
intangible
intangible
assets.
assets.
Expenses account debit. Over the what? Over the which period? Over the concession period. Over
Concession period.
right? Because at the end of the concession period, so this arrangement, this entire contract period is known as a concession period. ये नाम होता है concession period. और इस पूरी arrangement का नाम होता है concession, service concession arrangement to intangible asset. So when this project will be completed, this private party will hand over this entire infra to the government. What is the amount?
200 crore.
Your intangible asset becomes zero. In the books, intangible asset becomes zero. Yes.
In this case, how many years, sir? Question is not given, right?
Question is not given. If question would have given, let's say 20 years, and question asks you accounting for the first year, then you have to split 200 divided by 20, right?
Right, sir. Okay.
So during the operation phase, there could be a maintenance expense also, right? There could be a maintenance expense also. For example, the maintenance expense. This entity is incurring a maintenance expense also, for example. Operation and maintenance expense. Operation and maintenance expenses. What is the accounting entry for operation and maintenance expenses? Simple.
Operation and maintenance expense debit to bank account.
Debit to bank account. Very good. The numbers are not given, but let me write XXX. I hope with the help of this detailed example, the entire accounting is clear to all of you guys. Do let me know if you haven't understood any part of this question. Please let me know. And I need an oral confirmation or a written confirmation from each and every student. If you guys have not understood, I will repeat again. Yeah. Can you please confirm on the chat box?
It's clear from my side. I'm clear.
Okay.
Clear, sir.
Yes, sir. Very much clear from my side, sir.
Yes, understood.
Okay. Very good. Great.
सर फर्स्ट वाले में गारंटी थी इसलिए वो फाइनेंशियल एसेट था, सेकंड वाले में गारंटी नहीं थी इसलिए वो
इंटेंजिबल. वहां आपको राइट दे रहे हैं, यहां पर आपको फिक्स्ड मनी दे रहे हैं. राइट जहां पे दिया है, गारंटी नहीं दी है, वहां पर हो सकता है ना कि कोई दिन ऐसा हो जहां पर टोल कलेक्ट ही ना हो, राइट? या कभी आपका टोल कम कलेक्ट हो या ज्यादा कलेक्ट हो. सो देयर इज अ राइट, बट हियर the money was fixed, 200 crore was fixed. Okay. So whenever there is only right, it will be intangible asset. But wherever the money is fixed, it will become your financial asset. Right?
Right, sir.
Okay. So friends, what three concepts we have covered today? We have covered repurchase agreement concept, accounting in case of repurchase agreement. We have also covered the concept of contract cost. Right? Cost of acquiring the contract, cost of fulfilling the contract. We have also covered the concept of service concession arrangement. This is what we have covered in today, right? So friends, what is your comfort level on Ind AS 115 after after attending these 6 lectures, what is your comfort on Ind AS 115? Please tell me.
It is like a AIS 9 now. I mean to say it is easy now.
Okay. So,
Sir,
Ankit,
at the starting of time, this chapter seems very lengthy. But with each passing lecture, it seems like we are having a comfort with each and every topic.
great. Yes. So now the time has come, because it's a lengthy topic. Now the time has come when I need to explain you guys, and it's a Maggie time. You know what is meant by Maggie time? Maggie time is quick revision.
One time, two times.
Yeah, 3 minutes, 2 to 3 minutes cooking.
Yes. Quick revision. So now I will write down all the important topics and concepts, whatever I have explained. I will write down on this Excel file, and along with me, you guys have to also do a revision, right? We started this topic in DAS 115. We started this topic with what? We
The
started this
introduction
topic with
of
the definition. Sorry?
with the introduction of and
Yes. We started with
definition.
this topic with introduction of Ind AS 115, and we covered 3 definitions: revenue,
Contract
contract, and customer.
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 I think there is a echo voice.
Yeah. So can you please, everybody, can you please keep on mute? Everybody. So let me explain, and after completion of my explanation, I will ask you guys to, whatever question I'll ask, you can answer. Definition we covered. Then what we covered? We covered the scope part. We covered the scope, right? Scope we have covered. Okay. And we covered that Ind AS 115 is applicable to all the revenue except few revenue which is covered in the few standard, specific standard, like financial instrument, like insurance contract, like leases, like your exchange between the parties in the same line of business. You remember we covered this part 3. What is 3? Third, we discussed the 5-step model. 5-step model. And I have given you helicopter view of 5-step model. Then friends, we discussed the first step. Step 1. Identification of contract with the customer. And in this case, what we have discussed in this case, we have discussed the meaning of contract, term, contract unit, and contract, right? We discussed that. We also cover an important concept of revenue to be recognized to the extent of probability of collecting the consideration. You remember that concept, right?
Yes, sir.
Then we have covered the concept of when 2 or more contracts can be combined. You remember that 2 or more contracts can be combined when it is happening with the same party or with the relative of the same party at or the nearly same time. You remember 3 condition was there. When 3 condition will be satisfied.
Yes.
Yeah.
Yes, sir.
Single
Yes.
performance
Yes, sir.
obligation dependent on, so the consideration of one is dependent on the other. It is interdependent. Okay. So we discussed when 2 or more contracts can be combined and when it is treated as a separate contract. Then we discussed the concept of contract modification. You remember with FR classes, I have taken an example of a classes trainings. So contract modification concepts we have discussed, right? So this is what we discussed in the step number 1. Then step number 2 we have covered. And what was our step number 2? Step number 2 was determine the performance obligation. Determine the performance obligation. In performance obligation, what we discussed, what is your performance obligation? It is a distinct goods and services. And we have covered the concept of distinct goods and services. We have covered the concept of distinct goods and services. You remember distinct goods and services and series of
and a series of goods.
Yes, sir.
So goods and services has to be seen from the goods and services level individually and with the context of the contract also. Yes?
Yes, sir.
Yes, sir.
Yeah? You remember that in case of a context, in case of a goods and services at individual level, that goods and services will be considered as a distinct if the customer will be able to get the benefit by using it its own or by getting it from the readily available resources. We did the example of AC installation and others.
Yes,
And
remember.
within the context of the contract, it is considered as a distinct if it is not interdependent, if it is not highly customized, if it is not highly modified, integrated, right? And we did so many examples of that also. The concept we have discussed. Then what we have discussed in the determination of performance obligation, we discussed the concept of a right of return. You remember? Right to recover goods, refund liability, right? Then we have covered the concept of option of material right of discount, voucher, material right of discount. You remember that you have purchases and the company has given you a voucher of 40% discount. And at the sale, 10% is given to everyone, but you have given 40%. It means what is your option of material right of discount? It is 40% or 30%? 30%. 30%. And whether right of return will be treated as a separate performance obligation, answer is no. But whether this option of material right of discount will be treated as a separate performance obligation, answer is yes. For example, reward point. I have taken an example of Vistara Airline loyalty point. Do you remember that?
Yes, sir. Land.
Yes, sir.
Then concept of warranty. We discussed the concept of warranty. Warranty
Yes,
comes with the product and extended warranty. You remember?
Service
warranty and service
assurance.
warranty. Yes.
Yes,
So
sir.
assurance warranty which comes with the product is not a separate performance obligation. But the extended warranty, which is a service warranty, is a separate performance obligation. Right?
Yes.
So this is the step number 2 we have covered. See, I'm not looking anywhere and I am giving you the complete overview that what I have explained. Because I have learned FR from my heart. Okay? Not only from my mind.
You are the expert of the subject.
Step number 3. Then what was my step number 3?
Determination of transaction price.
Determination of transaction price. Step number 3. And what was the transaction price? Fixed consideration, variable consideration. And you remember the word was the entity expects the consideration in exchange of transfer of goods and services. Determine the transaction price. Right? And in that, so we have understood the concept of transaction price. Yes. You remember
Yes,
I have
sir.
given 3-4 example. And if you are collecting, an entity is collecting a money on behalf of the other party, then it will not be considered as a revenue. For example, the entity has sold goods for
GST.
1,000 rupees and collected 18% GST also. While entity has collected 1,180 rupees, but 1,000 is revenue, 180 has to be shown as a GST liability. Okay. So concept of transaction price. Then what we have covered in this case, transaction price, variable consideration, volume discount, variable consideration. You remember the concept of most likely approach, expected value approach.
Yes, sir.
Yes.
सुना सुना लग रहा है, सुना सुना लग रहा है. Is it
सुना
something
सुना
which
लग
is
रहा है, sir.
सुना सुना? Is it something which is heard or blank? Heard?
Heard, sir.
Okay.
Heard and clear in mind.
Clear in mind. Okay. So you guys will always remember clear in mind, suna suna ya suna suna, heard or blank. So remember these words from Alok Garg always. When you become chartered accountant. Also.
Yes.
So during the sleep time also it's coming like that.
Okay.
Sir, one of the such example is पढ़ रहे हो कि पढ़ रहे हो?
Sorry?
पढ़ रहे हो कि पढ़ रहे हो?
Very good. So after variable consideration, what concept we have covered in case of transaction price?
significant financial component.
Significant financing component, right? And you remember when the time of consideration and the time of delivery of goods and services are different and the difference is more than 1 year, then we can say that the significant financing consideration concept is there. Then what was the next concept? Non-cash consideration.
Non-cash consideration.
You are selling goods and services, but in return you are also getting goods and services. Then
consideration payable to
you are
customer.
paying while you have to get the money from the customer, but you are getting the money from the customer, but you are also paying the money to the customer. Consideration payable to customer. Right? So these were the 5 concepts we have covered along with example and illustration in step number 3. Then we have covered step number 4. What was the step number 4?
Allocation of the transaction price to various performance obligation based on the standalone billing price.
Allocation of transaction price. Allocation of transaction price to performance obligation. Right. In this case, we discussed the concept of allocation. You remember the concept of allocation? Concept of allocation on the basis of what? On the basis of standalone selling price, right? We discussed the concept of standalone selling price. Then we discussed the concept of estimation of standalone selling price. And in that estimation, what we have covered in that estimation?
Amma approach.
Amma approach. Then
cost plus margin approach.
CPMA approach.
RA approach.
And RA approach, residual approach. So adjusted market assessment approach, cost plus margin approach, and residual approach, right? Then we have also covered concept of allocation of discount. You remember there were big bucket, there were a small bucket. There was discount in big bucket, there was discount in small bucket. You remember that example of ABC?
Yes.
We have to allocate first a small bucket, then we have to go bottom to top approach.
Bottom to top approach. Very good. It's a bottom to top approach. First, you need to allocate to small bucket. You need to finalize the price, the standalone selling price, and again, you need to allocate the discount to the big bucket. Okay. Allocation of discount we discussed, and then allocation of variable consideration. Yaad aaya? If you are constructing a house and you are also maintaining a house for 5 years, the customer told you that the fixed consideration is 5 lakh rupees for construction and for maintenance 10,000 rupees every year I will pay you. You are an entity. And customer told if you deliver this house before Diwali, I will pay you 1 lakh rupee extra. So whether this 1 lakh rupee belongs to construction performance obligation or maintenance performance obligation?
Belongs to construction.
Construction.
So that concept we have also covered, right? Now, the concept of step number 5. What is step number 5?
Satisfying the performance obligation.
Yes, step number 5 is satisfaction of performance obligation, which is recognition of revenue.
Revenue recognition.
Revenue recognition upon
lost
satisfaction of performance obligation. Okay. In that case, we discussed the concept of what is the concept we discussed? Concept of
at a period of time overpaid.
Concept of satisfaction of performance obligation, right? On the basis of transfer of control, right? Then we discussed in the standard the criteria. We discussed the criteria of transfer of control over the period of time, right? And we discussed that the revenue is recognized The revenue is recognized at a point in time, or over the period of time. In standard, the guidance is only given for over the period of time. If that will not met, it will become at a point in time. Okay. Right. Then we discussed the concept of measurement of completion. Right. Completion. What method? Input method,
output method.
output method. We discussed the concept of contract cost also. Contract cost.
Cost
आज
of
मैंने cover
contract.
किया, पहले भी cover किया था contract cost also. These all things we have covered in this step number 5. Then we have also covered some important items, other items.
Bill and hold also we discussed.
Yeah. So I am covering that. So other items. In other items, what I have covered in other items, bill and hold arrangement. Bill and hold arrangement. Then repurchase agreement. And then service concession arrangement. These three aspects we have covered also. Service concession arrangement. I have left one item in writing here. Can you tell me what was that item? What is that item in step number 2? Can you tell me? What is that item? Which item? You remember example of Make My Trip?
Yes, sir. Agent versus principal.
Agent versus principal, right? So friends, this is what I have covered, right? In DAS 115, we covered definition, scope, 5-step model, helicopter view, step number 1, identification of contract with the customer, meaning of contract term, revenue to be recognized to the extent of probability of collecting the consideration, when 2 or more contracts can be combined, what will be the accounting in case of contract modification. In step number 2, determine the performance obligation, what is the meaning of distinct goods and services, what is the concept of right of return, option of material right of discount, agent versus principal, concept of warranty. Then we understood how to determine the transaction price, the concept of transaction price, variable consideration, significant financing component, non-cash consideration, consideration payable to customer. Then we understood how to allocate the transaction price to performance obligation, the concept of allocation on the basis of standalone selling price, estimation of standalone selling price on the AMMA approach, CPMA approach, and residual approach, allocation of discount to the performance obligation, allocation of variable consideration to the performance obligation. And what is the allocation of discount? Bottom up approach, right? Bottom up approach. Then step number 5, recognize revenue upon satisfaction of performance obligation. So performance obligation will be satisfied when the control will be transferred. Control will be transferred at a point in time or over the period of time. Criteria of transfer of control over the period of time we discussed. And when the over the period of time criteria is not satisfied, it will become at a point in time. Okay. So criteria of measurement of completion, which is input method, output method, and contract cost we discussed. And finally, we discussed bill and hold arrangement, repurchase agreement, and service concession arrangement. This is what we have covered. These 9 items, this is your index, this is your control list, and this is how you have, understood all this concept, which is there in my Excel file also, right? I hope you found this revision very, 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 very useful.
So very, very, very useful, sir.
Yes.
Very carefully drafted, sir.
Yeah.
Very carefully, you have explained and revised all these concepts.
Thank you so much. Thank you so much. Friends, this is how ICAI is telling its faculties that please teach like a private classes. Please teach like that, so that students will get benefited from your teaching, right? So we are covering theory, we are covering layman examples, and we are also covering illustration. Like you have seen, in case of contract cost, right? The concept which I have covered, I have given you the concept with the help of a small example, simple example, easy to understand. All the concept have been covered, and then I have completed one illustration. Likewise, in service concession arrangement, I have given you the real life examples, EMS, toll road, airport, right? Then I told you what is grantor, what is operator. I told you the accounting, and then explain the accounting with illustration number 75, so that you will have a complete package on every topic, right? This is what it is. But of course, right, you know, some gains come with some pains. Means when you have to score good marks, you have to put your effort also. The teacher and faculty can't do everything. They can just enable you so that you will be able to understand the topics. Your homework is to solve each and every question from the ICAI study material. If you found any difficulty in any question, you can write to me or the board of studies, right? Just giving the screenshot of the question and what is the problem. Definitely, whenever I get the time, I will call you. I called Saminathan also one day, and he can vouch for that. He can say that I have made him a call. Of course, it was after 7 or 10 days, but when I got the time, I will call you guys. Okay, Saminathan, have I called you?
Yes, sir. You called me and explained and gave me the examples also. It's really impressed and no, it's a kind of feel I have. It's amazing, sir. Thank you so much. You should live long.
Thank you. So the point is, guys, if you have any question, don't think that, you know, the faculty and the teachers and the board of studies are not accessible or reachable. They are reachable. If you have any question, please write to me on cacs@gmail.com. What is my email ID? My email ID is cacs@gmail.com, right? You can write on this email ID. Okay. Yeah. So we have completed this Index 115. So God bless you and have a good day. Thank you so much. Thank you so much. Right.
Thank you so
Bye-bye.
much, sir.
Take care. Thank you.
Thank you
so
sir.
much,
Thank you
sir.
so much, sir.
Thank you, Ashok ji. Thank you, Ajit ji.
Have a wonderful